cash open on the NASDAQ, you can see that there's been a couple of nice little inside trades here. So there was a nice little inside trade there. There was a nice little inside trade here, which was very close to the paycheck. So you had a paycheck liquidity here, and you had a paycheck liquidity, but that's a bit too far away for paycheck. Little pivot price here. Little pivot price here that set up this break. A spring trade at the bottom edge here on the failed auction higher. That could have been a very nice buy trade as well. Very nice buy trade, but you were trading that one at the cash market open, so that might have been a little bit risky for you, but you can always wait until the price goes back inside, remember. So you can see that that's the only trade you're doing on the NASDAQ. So the trade was a buy trade there. The trade would have been a spring trade buy there. The next trade would have been a buy trade there. You can see you've pressed, you've pressed, you've pressed. You've got a pivot. You've pressed. No trade there in terms of the pivot. However, obviously, you've now got a spring trade there. And that plays out. And you get a spring trade there. And that plays out. So that's your only real series of trades so far outside of this last press. So you had a pivot trade there, or a little spring trade there for a buy. And then you had a little spring trade there for a buy. And since then, you've obviously targeted the top edge with this press trade here, because there's the pivot there, the inside pivot. So you're going for the press trade at that point. And eventually you do touch into the prior highs for your target to take out. So you can see that there's a good series of buy trades there. I mean, you can see that they're all the authorized buys. If you were trying to trade those ideas, you'd have done very, very well for yourself since the cash open, wouldn't you? 6 trades, 6 winners. 6 trades, 6 winners. The best trade, of course, was a spring trade at 87. Traded a high print of around about 57, 57 for 70 points, obviously $1,400 per contract on that little spring trade. And it wasn't exactly the longest trade you've ever had to be sitting on a book for. So you're looking at around about 20 minutes for that trade to happen. And obviously we talked about the 1,300 hours, the 1,500 hours reversal. Well, what does that candle there look like? What does that candle there look like? The 1,500 hours reversal, doesn't it? Yeah. Right on the stroke of 1,500 hours. So what a lot of people say when we look at trend trading like this is, yeah, it's all very well highlighting the trades that you would have taken inside of a trend trade. But what about the fact that the last 2 trends didn't develop into anything? How much money would I have lost in those stages? Well, actually, not very much. If anything, actually. If we look at the 2 phases before that, or even the 3 phases before that, you can see they weren't exactly earth-shatteringly successful, but let's just think about what trades you would have had. So there was a pivot trade here, so there was no spring. Okay, so we got a trend change here. There's the baseline that you're going after, right? So you had a pivot trade there, no spring. So there was actually no trade during that sell phase, right? There was no trade. Unless you're going to do the interns BSG squeezes. If you're going to do the interns BSG squeezes, you had 1 out of 1 winners. So the only trade that signaled there was this sell trade there. It's the only trade. There's no spring trade. There's no pivot inside trade. There's nothing except for the BSG squeeze going after this buyer here. So that would have been a reasonable winner prior to the data, right? Prior to the data coming out. So that would have been your only trade if you're taking BSG squeezes. If you're not taking BSG squeezes, you never had any trades during that period. Yeah, but what about this buy phase? This looks horrid. Absolutely, it looks horrid. So we go into a buy phase here. If you were trading BSG squeezes, your first buy trade would have been successful because this would have been your first buy trade there. There is an inside pivot, which you could have taken at that point. You can see in the background there was an inside pivot right against that price there. So that could have been probably a definite buy trade. So that worked out okay. We got a bottom edge. We got a pivot, an inside pivot again forming there for a possible buy trade. That doesn't trigger. We then get obviously when you get an inside pivot, you're normally expecting a spring trade. So when we get a spring trade here, the price breaks south, never goes back above. So basically you had one trade, one winner, possibly a scratch, but still no losses. Still no losses. Yeah, but what about the time before when we had another horrible trend? Okay, so we look at this trend here. So again, if you're using this trend here, this very horrible trend, yes, your first trade would have probably have been a BSG squeeze if you're taking BSG squeezes. If you're not, you got a little spring trade coming in there. It was only one tick, but it was still a spring trade and it still made money. You then got a second spring trade, literally just exactly the same price, minus a tick or two or gain a tick or two, whatever way you want to look at it. And there's your next spring trade there. That also made money. So there's really no particular problems with any of these trades, is there? There's nothing really that you're looking at. We then obviously had a little pivot price here for a spring there. Yeah, doesn't trigger. Doesn't trigger. We then get a pivot price here for a possible spring. That doesn't trigger. And then we change trend, and that's the end of the sell trade. So really, two spring trades, both successful. So tell me again that these nasty phases makes you lots and lots and lots of losses during a trending trade narrative. Well, the answer is no. None of them made you losses. You generally had some reasonable trade outcomes, even when the market chopped, even when the market bracketed, even when the market rotated. By trend trading in this way, you still didn't lose money. And that's incredibly important for a trend trader like Catherine. If she can get through a period like this without losing money, then when the market breaks into little phases like this, then of course that's when the money's made. Because look at that buy trade now, guys. That buy trade, if you've managed to stay with it, absolutely killed it, didn't it? Absolutely killed it. It's now just traded 1380 at the bottom edge, 13180 at the top edge. That's a $2,000 per contract moonshot right there. $2,000 per contract moonshot. We said we would obviously develop out the idea of moonshots and targets and all that kind of stuff. And we obviously can do that in Classroom today. I want to touch on the gamma storyline because it seems as if it's still an alien conversation that I seem to be having with most people. So we want to just touch on a few extra elements of the gamma storyline, the delta storyline, the option storyline, implieds and realized volatility storyline. But certainly we can spend a few minutes on the developing storyline, how to manage one of these open positions in terms of two-lot trading. Whether it's a two-lot on a micro or a two-lot on a normal contract makes no difference whatsoever. But this has been a very, very big profit here. Now, I think the poll that Kim was organising was in response to a question that Catherine had asked about, do you give up, do you stop your trading? And my answer to that is, well, of course, in the world of institutional trading is you never stop trading. There is no such thing as stopping trading. In the world of institutional trading, of course, you are a trader. You're a full-time trader. You don't stop at any stage. You might down tools because the market's not giving you a trade setup, but you don't have a target that stops you trading. You don't have an idea, a process. You stop after 3 losses. That's not a trade thing. It's not an institutional thing. These are all retail trader concepts. Do you ever stop trading? The answer is no, you never stop trading. There's always something to be done. So that's my take on it, for what it's worth. That doesn't mean that you have to have the same take, right? But it's certainly from an institutional point of view, there's no such thing as just stopping trading just because you've hit some sort of target. Now, obviously, floor traders are self-employed. they can stop trading anytime they like. And if they make a big buck, then of course that life balance comes into question. But it's not about whether you should stop trading because of trading. It's whether you should stop trading because you want to have another life outside of that trading day. So that's really where the question should be asked. So that's not something that's necessarily going to find an answer from the community in terms of the classroom here. Some of the guys here trade full time. Some of the guys here haven't got anything to do today. You know, perhaps just today. I've got nothing else to do today, so I'm going to trade all day, and I'm going to try and find as many trades as I possibly can. So that's where the answer is going to be for those traders at that point. Some traders, well, I've got my grandkids coming over, so I'm only going to trade the first hour, and then I'm going to stop. So there's always that idea that there's a competing force that might be determining whether you trade the whole day or just a bit of the day. But there's the thing. Some people like myself, I don't have a life outside of trading, Miguel. I've got nothing, nothing at all. So for me, it's a full time, 23 hours out of 24 a day has got something to do with trading. And that's it. That's it. What the hell am I doing? So in a buy side only S&P, look at or NASDAQ, whatever, looking pretty strong. Good pop to the upside. Good solid auction presently. Good solid auction. Good solid narrative. And if you'd stopped trading, you'd have missed this opportunity here for massive profits, $2,000 per contract on the NASDAQ. And that would obviously be a real shame, to miss out on these types of big numbers for the big US session, of course. Now, what obviously happens for the institutions is that a lot of the times you stop trading, as in you stop trying to do a big commercial trade simply because the volume's not there. So you become more likely to be a scalper. So you can always change the type of trading you do. So you might reduce the size of your contracts, for example. You might move on to a scalpy type market, even if for example, if you trade in one market and you like scalping another market, you might chop into a different market for scalping a few ticks here or there. And remember, the key to this is, what else? What else is the other key? The more experiences you have in trading, the better you get. Now, that to me is the biggest reason why you should keep trading. If you can keep trading, if you've got the choice to keep trading, if you want to keep trading, the biggest single reason to keep trading is because the more times you trade, the better you will get at it. It's as simple as that. And that's the single biggest reason to keep going. Dealers have been massively on point, haven't they, on the pricing? Massively on point. They had this beginning buy side phase nailed 21 over 18s. Then the big day that they had here, this was the best of all, this gap here, 21 over 16s. That was the beginning of that big pop, wasn't it? And then they've been bullish, positive, gamma, bullish, neutral. Yeah, positive, gamma, bullish, neutral. They've been right every single day so far. So you can see just how good these guys are, right? You can see how good their pricing is. I wouldn't have been as confident as they were here because of the direct dealers from yesterday, because they were still putting in that relatively hot read for this PCE number. But obviously that changed when we saw the short-term interest rate guys this morning. So instead of being bearish, I simply just got off the trade. I just didn't do any business because we had that conflicting signal. And because we had the conflicting signal, I was happy to not do very much today. And yet I've still managed to work a reasonable profit out of this as a trade outcome. Nothing wrong with that. But you can see that this has been sensational. Think about this buy trade here. Remember, you knew this 20 over 15 here. 3960, 3955, 3960. SPY's currently trading 4060, 4060. 3960 to 4060 is $10. $10, guys. That's not a bad result for a $300 product, $400 product, is it? Not a bad result for 3 days non-leveraged to the upside product. The interesting thing about the S&P is we've not really seen any disagreement at any stage with the S&P, with the deltas and the dealers. The delta and the dealer and a dog named Jake and a cat named Kalamazoo. Where did that come from? The deltas and the dealers and a dog named Jake and a cat named Kalamazoo. Does anybody remember that song?